You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it is November 8th, 2021. Well, Bob Hoye is with us now, and Bob is the market historian. He is the guy who actually not only knows where the bodies are buried, he knows when they were buried. Bob, market historian par excellence, without peers. And it's great to have you back on the show, Bob.
Yeah, Kerry, thanks for the kind intro. And my gosh, it is fascinating times. But I think overall, one has to look at the really big game is inflation in financial assets. That's in stock prices and bond prices. Whereas since the election with the turn to Marxist socialist administration, I call them the inflationists have all got together and said, oh, now we're going to have the 1970s type of inflation, and the Fed is evil, and it's going to run forever. There's a fairly big hedge fund guy says it's beyond that. We're going to have the hyperinflation of like Germany, the Weimar Republic in 1922 or 23. And I have to stay with what I've observed in the financial markets, Kerry. And then, as I said, the big game is inflation in financial assets. Now let's look at how extreme it has been. The German 10-year note got down to almost minus 1% nominal, which means that the bond price was bid up. And in a history of interest rates, you've never had anything trade negative on a nominal basis. So that is inflation in bond prices without precedent. Then the other one is you've got let's talk about the cryptos and the Bitcoin. And I just saw a headline yesterday up to a market cap of $3 trillion and price gains. Now, throughout history, you've had huge price gains on mining stories, gold or silver mining stories, typically, where you go from pennies to dollars or pounds and stuff like that, so you get huge percentage gains. But these are minor events. When you take a large cap items like the Bitcoin and put the price gains on, this is also without precedent. So my case is the huge inflation is in financial assets, not intangible assets. And then, of course, the street now is saying that tangible assets are going to go to the moon. They're looking forward. And I think that's improbable. And the reason being is that following every great financial bubble, the first was the South Sea bubble in 1720, and number 4 was 1873 bubble, and 1929 was number 5. And I've been arguing for some years now that this current mania has all the classic attributes of a great financial bubble. So now, if you look at all of those bubbles, there's a pattern. And about a decade earlier, you had a war and a terrific zoom up in global commodity prices. So, for example, another bubble I didn't mention, 1825 was a huge bubble. And the commodity high before that one was in 1813 with the Napoleonic Wars. And then in 1873 bubble, the high for commodities was sort of around 1863, with primarily the U.S. Civil War. And 1929, you had the huge bubble boom in commodities. 1920, a major crash in 21. As a matter of fact, Kerry, the rate of inflation in the U.S. reached 24% in 1920. And in 1921, it was minus 15 or something like that. So the Fed was very much focused on deflation. So ironically, the Fed was easy through the 1920s, the roaring 20s, and that added to the party in financial assets. And the Fed was unaware of the dangers in a great financial bubble, because the danger is that once the bubble's over, most asset prices have deflated, and you've gone into a long period of financial and economic contraction. So this is our case. Now, what happened here? You had a pretty big boom in commodities in 2008. That's when crude oil went up to 147. And then you had another big boom in commodities, 2011, where gold and silver prices went up, and copper, base metals, they all did wonderfully well. And so you would then roughly say about a decade later, there should be a huge global bubble in financial assets, which is what we have. So our task now is to find the end of this financial mania. And we have a couple of benchmarks on that as to on the S&P. It just has to take out the last of our springboard buy things, which was in September. So the what one wants to understand, Kerry, is that the issue now is inflation in financial assets. And history suggests that you're not going to go into a leg up of inflation in tangible assets. It never happened in the past. You always go into a deflation of the hot games. So this is where we're now watching for a transition in here. And I've got a bank of stock charts, or stock financial and commodity charts here that I'm just sort of waiting for a couple of items to break, and then I'll publish it. But I can say that we are on the path to a financial contraction. The climax of each of these bubbles have been the same. And for example, what has prompted the excitement of inflationists about commodity prices flying forever is that you've had some rallies in commodities over the last year. And our point has been, actually last January, we were looking for commodities to rally out to about mid-year. And so what you've got here is the rise in commodity prices is associated with the increase in business activity that you get with the final stages of a great financial mania. And so there was the interruption with the COVID panic and the governments around the world shutting down the economy, which is without precedent. But the main carrier wave of a bubble brought it all back together again. So in the previous financial bubbles, we have the history of gold and real price in real terms in the senior currency. And lately, the dollar, prior to that, the senior currency was sterling when London was the financial center. And you get gold's real price has declined with each financial mania from 1720 to 1929 to recent. And then where we've got the history of copper back, copper's real price has gone up in the final phase of a great bubble, And indeed, copper has gone up, and lately aluminum was the very hot item. So there's been a rotation in commodities all year long going on.
Natural gas, I mean, it's
natural gas,
everything.
Aluminum, uranium, cobalt, vanadium. It's all been earlier in the year. Very dynamic moves in corn and soybeans. They all blew out, reached excesses. So, and this is what you've got now. For example, on the CRB commodity index, you're getting technical excesses unseen since 2011. And that was a cyclical peak. So we're at a cyclical peak for these things that I suggest has much to do with the financial bubble and is not anticipating a decade of soaring inflation. So the other item that you get in the last part of financial mania is the senior currency, which now is the dollar, weakening to other currencies. And then part of the change to the post-bubble world is the senior currency becoming firmer relative to most currencies and most commodities. Well, if you take a look at the DX since January, which was a hard oversold, from which we thought it could build a base, maybe 4 months, but it took 6 months to build the base. And then what we used to measure the end of the base building in the DX was when it rises above the 20-week exponential moving average, which was at 91 in, May or something like that. And then right now for the dollar index, the view is that if it gets into 95, that then really extends the uptrend, and it will be signaling problems in the credit markets. So it's trading in the 94 level, but it has to get right through into 95. So there's another one that's in transition. Now, and the other one that you get that's consistent is that real long interest rates in the senior currency, adjusted for inflation, decline with the final year of a great financial bubble. And the recent posting a month or so ago on the long interest rates for treasuries was minus 3% now. This is real price relative to inflation. Now, on a couple of previous bubbles, the real rate got down to -5 and -7%. So again, this is in line. So what we're watching here now, Kerry, is for at some point long treasury rates to go up, but probably before that, you're going to have long low grade, bond yields, going up, junk, emerging debt, high yield stuff is going to turn up, and then that will then set the pattern where you then have rising real rates as part of the post-bubble world. So let's see. So we've got copper declining. That's in line. You have had gold's real price declining, which is in line, and it seems to be preparing for a rally. You've had real long interest rates decline. That's in line with the final stages of the bubble. And we're watching, as I said, for the long corporates, low-grade corporates to take a turn to rising. And then you've had the dollar, the senior currency, establish a base and seems prepared to rally. So our benchmarks, Kerry, of these important items are doing what they have done at the climax of previous bubbles. So we can say with a fair degree of confidence that financial history is on the path to completing this climax relatively soon. Maybe we might know this as we get into the new year. And that then the path will be a contraction with even real estate prices going down. So where the investor wants to protect himself is that on each sector or each individual stock that blows its brains out on the way up, gets overbought, very overbought, to take money off the table. And then once the break comes in, let's just use the S&P. Once it takes out the last important low, then one wants to shift one's stance to preparing for a bear market. And so we're going to continue to monitor these things. But if we do go into, and I think it's highly probable, a post-bubble contraction, the treasury bill rates, which are close to zero, are going to get to zero. So if you go to cash or bank deposits, you're not going to get any money. So one wants to get somewhat of a higher return. So we look to high-grade corporate bonds. In maybe a 4-year maturity, you're not going to get whacked in price. You're going to get redeemed at par, and you're going to get a little more income than you will from zero in a T-bill or in a bank deposit. And then the other side is an industry that consistently does very well in a post-bubble contraction, and that is the gold sector. And the way that one works, and again, our original research on this was done years ago, is that in the final stage of a bubble, when gold's real price goes down, it reflects operating margins for gold mining. And we like to use the example of Homestake in 1929, where the costs of everything were going up, and the price of gold was fixed at $20.67 an ounce. And so Homestakes and other miners, gold miners, costs were going up, and the profits went down. The stock was an underperformer in 1929. And then you could have bought Homestake for around $9 in 1930, 1931. It took a few years to get all sorted out on this, but we've done the numbers. And so Homestake reported a loss in 1929, and then they started to report profits because although the price of gold was still the same at 2067, their costs had gone down. Right. Cost of energy had gone down. Cost of mining equipment had gone down. Cost of mining wages had gone down because of the bear market in base metals. So by the time you get to end of 1932, where gold was still fixed at $20.67 an ounce, Roosevelt didn't start fooling around with it until March 1930 or 33. So Homestake stock was up something like 140% to the end of 1932, and their earnings were up about that amount as well, on no change in the price of gold, but the improvement in gold's real price. So then in 1933, and Roosevelt came out with the crazy scheme to elevate the price of gold because they thought it would elevate grain prices, which it didn't. But anyways, it added to the gain in gold's real price, such that then the whole sector became a party, and Homestake stock went to 65 or something like that, and in 36, 37 in that period. And here's the story that in those days, Kerry, gold miners paid out most of what they earned by way of dividend. So if one had bought Homestake in 1930 and 31 at $9 a share, in the mid-1930s, it was paying $4.50 a share dividend.
Wow.
And the stock was up into the 60s. So, but then we've got this back on all of the previous serious post-bubble contractions. Gold's real price has gone up for years, and it became the most profitable sector. Now, there could be some new industries, new companies come out over the next decade that we can't predict. But you can look at the pattern and say, yeah, we're about to go into a multi-year bull market for gold and gold stocks. And this would be from the seniors to the middle in size, and there will actually probably be outstanding action in the exploration side with discoveries because, yeah, a real price going up helps operating margins, but also a real price of gold going up helps the valuation by geologists in determining whether a property should go ahead or not. So, hey, it's looking good, but we aren't there that. So now, to back up and on our positions in gold stocks themselves, in July 2020, we noted the technical excesses being accomplished in the sector, and the advice to investors and traders was to take some money off the table because it was pretty well, the gains have been so good. And then since last summer, we've been looking for a possibility of a financial crisis being discovered late in the year. And we're still looking for that, Kerry. And then we just took a number out of nowhere and just said, hey, we would start to look seriously at the gold sector for a low in November. And I think there can still be a washout in here, which hopefully our technical tools will catch the oversold and come up with the buy on the sectors. And I think that's still ahead of us. So now there's even more upside for the golds than just beyond talking about gold's real price, is that when we had the buy for the golds in November 2018, the advice was that quite likely the gold stocks would outperform the S&P. Mm-hmm. And on that move it did, because we took the GDXJ and its percent gain to last July 2020, it was 2.2 times the percent gain in the S&P. So that worked. And this is so what's going to happen on the next leg up for the gold stocks is that they will not just be going up, but could be outperforming the S&P. And at that point, you get a few quarters of that happening, and many equity fund managers who may not have big positions in the gold sector are going to look at that outperformance, and they're going to have to buy it. They're going to have to own the gold stocks. So this is where, on the longer term, Kerry, we are very bullish on the gold sector, and let's throw it in. I can hardly wait.
Yeah, hey, well, that'll be interesting. So what is the home stake of our day? Is it Newmont? Is it Barrick? Is it Agnico Eagle? Or one of the majors? Who is it?
Don't just survive. Thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold two companies in the past 7 years. Osino has an excellent shareholder base, with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Fabulous companies out there, and they will be adding to their own reserves. Some of these companies are still doing field work, and themselves. They'll be acquiring other producers. And then, as I say, there will be independent companies coming up with exploration targets. And there's a lot of geological talent in some of these smaller exploration companies. The knowledge about gold systems has advanced over the last 40 years. It's been absolutely amazing. I have a degree in geology from a long time ago, and my knowledge of gold geology is quite limited, but I do appreciate what the top exploration teams have done over the last few decades on being able to identify gold prospects and get in there and get the work done and come up with the discoveries. And
yeah, but
I think discoveries will be marked up hugely in price. They'll be fabulous. So
what about
I like the sector.
What about what's going on in various jurisdictions where the hostility towards the sector, even though it's responsible for these countries' economic growth, they're putting up obstacles? And then, Bob, like, how long did it take when you got your geology degree? How long did it take to start a new gold mine from exploration to production?
Oh, long time. It's always been, whether it was base metals or precious metals. It's a long
10 years.
It's a long experience.
Was it 10 years before the internal combustion engine? That was around the time you got your degree, right? The advent of the car.
Easy on that. As I say, the geological knowledge now is really outstanding, and the techniques are terrific. Now, there are many regions where the environmentalists have been effective in curbing exploration. And I've got a lovely story about, I know of a deal in Colombia, a major prospect, a gold system. And there's been no problems with druggies in that area. There are more military and more police than there are villagers, and people in the village are quite happy, and they're content to, as artisanal miners, to take gold out of the system. But remember years ago in Peru or somewhere, there was a very violent guerrilla movement called FARC, F-A-R-C.
Sure.
Well, there's in this remote part of Colombia, there is a little contingent of FARC, and they're not harming the locals, but they don't like the environmentalists, so they're keeping the environmentalists out.
All right.
All right. Somebody may put a little sand in the gas tank of an outboard motor, that sort of thing. So it's really a funny story where a small contingent of guerrillas in Colombia are keeping out the environmentalists, and it's the environmentalists that are the dangerous side of the political spectrum. So
they're protecting humanity.
Story.
They're protecting humanity from the wacko environmentalists, and there's a certain irony that you're illustrating here, Bob. That
it's wonderful. So
the guys who are out to the tree huggers to save the planet, and not everybody loves them. Like, let them go back to their own country and try to save it.
Yeah.
Hey, all I know, Bob, is this winter we have a horrible winter ahead of us. Almost certainly, maybe not so much in the States, but certainly in Europe. Nat gas is $30 per million BTUs right at this particular minute. I don't see a huge supply coming in there. And
the European environmental crazies have ruined things.
Yeah.
And ordinary folk are going to suffer limited energy heating supplies this winter, and they're going to pay up for it, and they're going to look at the crazy environmentalists who have caused it. So here's the other aspect on the bigger picture, Kerry, is that part of the historical work I've done says that once this financial bubble is over, the bubble in politics will be over. And this was kind of elusive, but the final stages of the of a authoritarian government is to fund itself through chronic currency depreciation. And of course, this is the story that's going on now. So what happens with currency depreciation? You get speculative financial markets, commodities and stocks and stuff going up. So the case that I'm working on is that once the financial bubble starts to deflate, the political bubble will start to deflate. And the election in Virginia is instructive in this. The patriot mums got out, ordinary people against school boards and everything. So the political powers of the left have been extraordinary, and I think they're going to fade with the financial markets. They did in 1920, where I mentioned how big a commodity boom that was. And with that mania and the First World War, American government were nationalizing railroads, of all things.
Right.
Crashed 1921. Oh, why are we owning railroads? So they started privatizing railroads. And in Russia, they went from straight communism to kind of a free-flowing socialism with some regard for prices. So, and then this, of course, became part of the pitch in the 1928, 29 stages of the stock bubble, was that Eastern or Europeans were no longer socialist and would be good retail accounts. So I'm looking at, beyond a probable deflation in financial markets, I'm adding that we're going to get deflation in the crazy left political environment. And you can see it with that election. And then what was the other one in New Jersey, where the truck driver with a budget of $2,000 took out down an important Democrat.
Not $2,000. He spent $153 and took out the longest serving Senate leader in New Jersey history. This guy Sweeney, a real kleptocrat. Like all politicians, I'm not just singling him out. But $153. He printed up campaign flyers, business cards. Maybe he printed up $100 bills too while he was at it. I'm not accusing him of counterfeiting, but you know. But he was
wearing out shoes, knocking on doors.
Yeah, evidently
presenting himself in his stories.
Well, this is why. When you see things like that, like New Jersey's as blue a state as it comes, been blue and purple since I grew up there a long, long time ago. And this is why political tectonic shifts happen throughout history of the United States and for all countries for that matter. And they are never predicted because, there are these paradigm shifts in politics.
Yeah, I like that phrase, paradigm shift. Yep, that's a good one.
And that's what your knowledge of history, Bob, really tracks paradigm shifts. The Great Depression was a paradigm shift where we shifted almost globally from free market, laissez-faire capitalism to planned economies. I think we're getting to the end of that tectonic shift, that paradigm shift. Yeah. And it's going to be interesting. I just hope
this contraction. This contraction will be with a reform of authoritarian government.
I hope you're right.
Whereas the 1930s, Roosevelt used the Depression to expand government in an unprecedented manner.
Hey, so in other words, Bob, get your pitchforks out. You're going to need them because we're heading into uncharted times. The other thing I wanted to ask you, because you so masterfully use history to show what we can expect, but this collapse, this contraction is probably going to be the greatest in history, don't you think?
One can search around for a phrase and you can come up with, it could be one of the greatest disappearances of wealth in history.
Except for those of you holding gold and silver, crypto is another story, right?
Oh, crypto! I take it as a unique counter created for speculators in a great financial bubble. I think perhaps something good may come of it with the with all the technology behind it, I think perhaps we can come out with some kind of a gold-backed global currency that is designed to hold its value as best possible, which the world needs. But then you can just go to the senior currency and make it gold convertible, and then has always been the best approach anyways.
Oh, they're going to do that kicking and screaming to the grave. You know that. You know how that works.
Sure, but I think it's likely to happen. The work I've done, and I'm working on the book now, treats these as tyrannical centuries. Yeah. Where all of a sudden the Western world, so to speak, goes crazy, socialist, Marxist. And it was the 3rd century in Rome was the tyrannical century, and freedoms went and authoritarianism came in. They spent all the money, and then the contraction started and Rome fell apart. The bureaucracy fell apart.
Yeah.
And then the next century of rampant and price inflation was in the 1500s. And when you get into the early 1600s, and it's best followed in England, when you had a great Reformation start where ordinary folks just had enough of in-your-face and in-your-wallet government and moved to shut it down and was successful eventually. And and so I see the same thing. The price inflation started around 1900, and you went from when liberalism was defined as being the freedom of the individual and combined with limited government, and now liberalism is the opposite. It means authoritarian government. And now I've got a definition I'll throw at you, Kerry, is that the experiment as it's happening in Canada and the US and Europe and elsewhere is authoritarian.
Absolutely.
And it could go totalitarian. Now, in physics, there is a definition of a totalitarian system, and it is very elegant. That which isn't compulsory is prohibited.
Yes. Yeah.
Okay. Now the jump from authoritarianism to totalitarianism, I define myself as totalitarian is when the state grants the governing classes grant themselves the privilege of state murder. And the reason why that has happened in the past is that their policies are so unpopular that they have to crank up the authoritarian, and then eventually, for their own benefit and enjoyment, they then bring in state murder for those they dislike, for those who won't behave themselves, for those that reject these increasingly insane policies that are coming down the line. So, and I don't think it's going. I think that the Americans will lead the Reformation, and I think that in America it will not go to totalitarianism. I think the moment the financial markets fail, the political movement will fail, and then we're into, to use your timely use of the word, paradigm change.
All right. Well, it's going to be really interesting to see how this shakes out. And, I just don't know if America is too far down the rabbit hole or not.
Don't just survive. Thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, if the Americans can't do it, well, you've got like Hungary and Poland. They're familiar with National Socialism and international socialism, and they're moving to protect their citizens. So it is a global thing, but it still depends upon the Americans to really make it work.
Agreed.
And Kerry, I'm an optimist. I think that the financial contraction and the political reversal is going to happen, let's say, sometime over the next year. And then all of a sudden, once it turns, it's like when the public in East Germany in 1989, the East German government had full control. And if a German went from one part of Germany to another, the dictator Honecker could execute them. And then in one instant, the border guards, East German border guards, who were not of the governing classes, but who were of the ordinary folk, laid down their machine guns, and East Germans went cross-border shopping. Then Honecker had to change the law that required the state to murder those people. And I would argue all day long that was the turning point. The bringing down of the Berlin Wall was the turning point. And then what you've had since then is the full leg of authoritarianism came in, and each of the two big previous examples run for a little over 100 years. And then the distortions become so painful that ordinary folk move, and we're seeing it now. As I said, the Virginia election, and as you outlined the wonders of the truck driver in New Jersey, this is the stuff that was expressed in 1989 with the Berlin Wall. This is the equivalent.
Yeah.
It's very exciting.
Well, it was exciting.
And I'm writing my book on it.
It was exciting to me, and then we got to wrap up. Bob, last week when Powell opened his mouth, there was almost, I could feel this realization among people that, hey, the emperor has no cortex here. Yep. There was like a loss of faith, and I think that's why gold went up and silver went up, and I think they're still going strong. We'll see if they can put the toothpaste back in the tube. I don't know the answer. Hey, but just check out Bob's work. Just Google him, Bob Hoye, Hoye. One of our favorite guests here, one of my personal friends who has taught me so much over the years, for which I am grateful. If you have a question for Bob, send me an email to kl@kerrylutz.com, and I will get you an answer. Bob, always a pleasure, and we'll talk to you again real soon. Appreciate you coming on.
Good deal, Kerry. Looking forward to it anytime.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.